Welcome to Markets Now. I'm Michelle Rook along with Ted Seifried with Zaner Ag Hedge. And post the WASDE report, we're seeing the grains mostly lower, except for a few of the wheat contracts. Over in the livestock were mixed. And Ted, let's talk about this report. First of all, probably the biggest disappointment was corn ending stocks. Sum total, we got lower yield, but higher harvested acreage. So sum total was ending stocks went up a bit.
Yeah, so still well above that 2.2 billion bushel carryover, and that is a problem for corn. And the fact that production went up, yet they didn't do anything to increase demand, well, that just irks, right? Because usually when you have a higher production, and although it's not dramatically higher, right? Because the bigger acres and lower yield just ended up, showing us about 40 million bushel increase in production, not that huge. But zero touch on the demand side of the equation. You would have hoped that maybe, hey, ethanol. In my opinion, I think ethanol is the only one that has upside potential there. But do something. And the fact that they didn't, I think, just really leaves kind of a sour taste in the mouth. And honestly, I'm going to say, the trade estimates for yield on this report, Michelle, were really modest, looking for modest declines compared to a lot of the talk that's been coming from, social media, producers, agronomists, a lot of analysts, brokers for that matter, really looking for numbers, to drop a lot more than that. And the fact that they didn't, I think, is the biggest problem that we have here today. And again, it's really hard to say corn has a bullish situation when you're sitting above a 2.2 billion bushel carryover.
Yeah. And harvested acres, another 800,000 of those. And you think a lot of that was just profitability standpoint. Producers just put more corn in the ground because just the dollar figure worked out, huh?
Yeah, honestly, it's kind of a shame that we didn't really add to the bean acres. But yeah, if you think about it, right, back in October, we were paying almost record high prices for inputs. And then when comes spring, a lot of places, most places, we're looking at input costs that were significantly less, in some cases, a third less. So you're sitting there saying, hey, if I planted a little bit more corn acres, I could really kind of average that input cost down and make my margins look a little bit better. And I think that was the biggest value proposition when you had, close to $6 corn at the time. So yeah, corn looked really good to plant. That was reflected again today as that acreage number, which was already big, went even higher. Beans just marginally higher, up about 100,000. But yeah, and honestly, Michelle, back when we had the planted acreage numbers, we were kind of wondering where some of that principal acreage went to. So now this kind of makes sense with some of that coming back.
Absolutely. So let's talk about corn price. Where do you think we go from here? Do we hold 450 with this in mind?
Ooh, we're not going to like this answer, are we? Here's the problem, Michelle. The USDA didn't add anything to demand here on a higher production number. And you have a 2.22 billion bushel carryover. We have to go find a point where we add to that demand because that carryover is too big, in my opinion. So where do we do that? And that is the question. And it's really hard to say. I mean, we can talk about charts. We can talk about support, psychologically at that 450 level. You can talk about 420 having multiple years of support or historical support. You can talk about 380 being a very big target. But yeah, really the question is, when does the global end user step in and start aggressively buying corn so that we can say, hey, our exports are going to be good. Ethanol plants are going to continue to crush, which again, that's the one I think does have pretty much immediate upside potential. But we got to find the demand. And that's the question. Unfortunately, I don't think 450 holds us at this point, Michelle.
Okay. What about the soybeans? We mentioned that we got lower yield, just a little bit bigger harvested acres, but the net sum was 25 million bushel decrease in ending stocks. But market kind of disappointed with that too.
Yeah. So, the yield actually came out just 1/10 better, but the yield was was smaller than what the trade was guessing, than the average trade guess. Production was smaller than the average trade guess. So first glance, that should be a pretty bullish report. However, the USDA cut more demand than anybody, I think, was expecting them to. Well, I don't know. You should see my balance sheet, I guess. But that was the big disappointment for soybeans, right? Because, the trade was looking for a 207 was the average trade guess for carryover on a yield that was slightly higher than what the USDA gave us. So for the fact that yield came in lower than the trade guess, but they had a carryover at a 220 million bushel carryover instead of like 205. That's the rub. You know, the USDA was able to cut 35 million bushels off of exports. They were able to cut 10 million bushels off of crush. I don't think there's a whole lot more downside there when it comes to the demand side of the equation. But just for the fact that they were able to do that and still give us a 220 million bushel carryover in soybeans, it's not crazy tight. And it's not a situation where soybeans, I think, are going to lead the entire grain complex higher unless you really believe that that yield is going to come down again in October, which history would say after lower August and lower September, that October yield might actually end up creeping back up a little bit. But yeah, unless you really, really are adamant that we're at a 48 half national average yield, it's going to be tough to get a tremendously bullish story out of soybeans, or at least a bullish enough story to say it's going to lead the entire grain complex higher. You really get the feeling after what we're seeing here today and the balance sheets that we have in front of us, Michelle, that king corn is the one that might want to lead the way lower. Soybeans might have to follow. Man, this just has a real 2013 feel to it right now.
Wow. So then that 1350 level here on beans is going to get sliced through pretty quick, you think?
Yeah, I feel like unfortunately that's the case. And then we don't really have any major support, both psychological and, you know, longer term trend and trend line and moving average support right around $13. My big target right now is $12.80.
Okay. What about wheat? U.S. domestic ending stocks unchanged, 615 million bushels, but we did get a 7 million metric ton drop in global production, or global ending stocks, I should say. So is that why we're trying to come back here in the wheat, or was that market just so overdone to the downside?
Yeah, all the above, right, Michelle? I mean, first of all, we knew, or really we're not expecting many fireworks on this report for wheat. We've had all the fireworks in wheat. This is the report where wheat kind of takes a back seat and you get the fireworks in the row crops. But as you said, you know, hey, big drops on the world balance sheet. They cut what? They cut Australia 3 million metric tons. They cut Canada 2 million metric tons. They cut the EU 1 million metric tons. So production problems kind of around the world is highlighted on this WASDE report. And I think that should provide some support for the wheat going forward. Oh, by the way, they did increase Ukrainian production. But like you said, you know, 7 million metric tons coming off that world carryover. You know, it's a better story than what we had last month. It's not necessarily tremendously bullish. I think wheat is going to be the stronger end of the intra-commodity spreads between corn and soybeans. At this point, I'm not convinced there needs to be a tremendous amount of downside potential in wheat. But you don't have like that shining silver bullet here that says wheat is really that bullish that it can find some independent strength from the row crops, or even, you know, find a way to lead the row crops higher. It was a neutral domestic balance sheet, really nothing. 615 carryover is a comfortable balance sheet. I mean, it's on the tighter end, I suppose, but it's not a situation where we need to price ration wheat, I think, in any way, shape, or form at this point. And that global balance sheet, yes, it's nice to see that reduction, but it's still ample supplies of wheat, really. There's not a story there. I think we're going to have to be focused on the row crops here for a little bit.
Yeah, that market has certainly been disappointing. And then let's just make a comment here about livestock. Cattle kind of reacted negatively here to the fact that corn went down, but we went up into contract highs there. So is that market going to roll over here? I guess I'm wondering, are those reversals?
Yeah, that's a really good question. You know, we've had a lot of key reversals in the cattle market, and it still hasn't had that big drop, that big deep correction. I think the fundamentals are still really fairly bullish as long as we don't go into this, what a lot of people are worried about, you know, the fall slowdown, you know, maybe potential for a recession here domestically and abroad going into the fall and winter months. If that happens, that will put a damper on high-priced beef sales at the grocery store. And I think that's the concern. But, you know, we don't have a ton of supply, and that story's been around for a year now, right? The struggle to get up and over new highs is a little bit concerning, Michelle, because it does feel like this is maybe a longer-term topping formation here for cattle. But also, like I said, unless we start getting the bigger economic concerns, I'm hesitant to say that we have a whole lot of downside potential from here, at least not in the near term.
All right. Thanks for joining us as always. That is Seifried with Zaner Ag Hedge and Markets Now.